What's up, y'all? Welcome back to the channel. In this video, I'll be breaking down premium and discount and how you guys can use it in your trading, because I've noticed that a lot of traders make the biggest mistake of buying too high and buying too low. But using premium and discount, it can definitely help you guys understand when to sell and when to buy based off of premium and discount. So let's get to it. So in this PDF example, you can see that we have a range here from this swing high down to this swing low, and price is sitting currently inside this shaded area below this 50% level, which will be your discount or the cheap level of the range. So here you also can see that we have a green shaded area above the 50% level, and that is going to be your premium or the expensive side of the range. So here we notice that price have been selling, and now we're sitting here below 50%. So if I know that the trend is going down and I want to continue this trend down, I will have to look for price to make its way back to a premium, preferably to a key level, and then make its way back down again if I believe that price should continue down because the overall trend is bearish. So as we can see, continuing this bearish example, price had made its way inside this fair value gap, which is your internal liquidity, above this 50% level, which would be your premium level. And now price had reacted to this fair value gap and traded down to external liquidity, creating a new swing low and a new range as well. You can see in this bullish example, it's the same thing, just in reverse. We had a range from this low to this high, which would be a swing low and high. Price was in a premium, so it was too expensive. Price will always pull back. However, once it gets inside this discount area, because the overall trend is bullish, price just came to collect internal liquidity, to reverse from this area, and then start making its way back high to create a new swing high, getting external liquidity, and now you have a new range. So now I'll be going over some live examples on the chart so you guys can understand it a little better, and I can break it down further. So let's get to it. So here we have M and Q, and I'll be going over a bullish example on M and Q. So as we can see here, price had swept these lows here. So we took out sell side liquidity once price came down and took these lows. If you notice, this last down close candle is basically the last candle that came and swept these lows, right? So after this candle has swept these lows, we broke back inside the range. So now this downtrend has just shifted into a bullish trend. So how can I get inside the market using premium and discount? As you can see, when this low was created, it created a swing high after it broke out, giving us a change in state and delivery above that last down close candle that swept the low and created a new low. So as you can see here, if I draw my fib from this low to this high, you can see that price came inside a key level, which was our fair value gap, and then inside this discount area, and then you can see price reacted, broke structure, and continue higher to a new swing high. So now that we have price trading above this high, we want to see price come back inside this new current range. So price made this new range here, and now I want to see price come inside this range on a discount and trade from this level. So let's see if we could find an entry on the lower time frame. There's a fair value gap inside the discount. I want to see price trade inside this key level before I look for an entry. So I'm gonna go down to my lower time frame and wait for structure to react to this level. So as we can see, price is reacting to this level, and then we get a breakout to the upside. So price creates a new swing high as after it took out this level at these lows. After price swept these lows, it actually broke straight up and it made a new swing high. However, now that I'm seeing that price has shifted bullish, I can look for price to pull back and give me an entry. So price came into our key level, which is below the 50%. That is a discount. We broke back out. Now I want to see price pull back, give me an entry, and then I can trade from there, put my stop loss at a safe level, and then look for 1 or 2. So let's see if we can get a new fair value gap where I can enter from. So as we can see here, price just came inside this small fair value gap, inside this new range. From this low to that swing high, price came to that discount level at 50%. Boom. So now I got a new change in state and delivery. This candle is closing bullish. I can enter here, and now my stop loss can go right below this swing low. and I can just look for a 1 and 2. So let's see what happened. And as you can see, price would have hit your target. So in this bearish example on M&Q, we can see that price has sold off aggressively. So that's telling us that the higher time frame wants to be bearish. And as you can see, price is slowly making its way back inside this range. So I know that price is favored to go to the downside again. All I need to do, my premium and discount tool, and I want to see price give me a reaction inside this premium where I can look for a trade on a lower time frame and trade it from this premium to a new swing low. Because price is inside this premium, I know that price is too high and this is the best place for me to sell at. I can't sell down here because price is at a cheap price, and we understand that we don't want to sell low, we always want to sell high. So as we can see here, price is coming inside this level. We have a fair value gap right here inside this premium, and we're getting a reaction off of this level right now. So if I go down to my lower time frame, I can see price shift structure. If we close below this last up close candle, which you can see these last up close candles was the one that broke out to create this new swing. If we can close back below this, that will be my change in stay in delivery, and I can look for prices to go lower. So as you can see, we got the close below there. So all I'm going to do is enter here. And now you want to find a level that you could put your stop at and just go for a 1 and 2. Now let's see how this play out. And as you can see, price went to its target. So the way that you can look at this is, let's say that you were inside a store and you wanted to buy some shoes, or let's say you wanted to buy something wholesale, right? You want to buy that at a cheaper price. You want to buy a bulk at a cheaper price so you can sell it for higher, correct? You just got to think of it as if you were someone trying to sell a product. Would you want to sell low or you want to sell high? So when it comes to premium and discount, you can see that when price is inside a current range, depending on the price, you want to see price sell from here, because I want to sell at the highest prices I can possible. I can get the most on my return, right? So if I'm in a cheap area, or if price is at a cheap price, I can buy a whole bunch of product at that cheap price to then sell it. You get what I'm saying? So if I buy a bunch of product, prices at this level here, okay, cool. I can buy a bunch of products, so when the value of this product goes up, I can then sell it at a high price. So you got to look at it like that. Some people use supply and demand, but as long as you have a premium and discount and you have a swing high and low, that is going to be your range. Once price get above that, you can sell. When price is below a range, you can look to buy to the 50%, which would be an equilibrium, or you could just buy into another level that you can see inside the premium range. This is how you guys can look at it to make it more easier for you. Just use it as if it was real life. What would you do if you were trying to sell a product? What would you do if you was trying to buy a product? So you want to look at it like that. So in this example here on gold, we can see that price just created a new swing low, and now we have a new range here from this high to low. So if we sitting below this 50% level, I know that I could look for buys to at least for price to at least get to 50% of this range. So here I can see that we have a candle that swept the previous candle's low, closed back inside the range, and it also swept these lows over here. While that's happening, we also have a fair value gap all the way over here on this 4-hour time frame. So I have a key level, and I have that we swept liquidity already, and now we're looking to see if price wants to make its way higher. So going down to my lower time frame, I can see that price had broke structure here once price had finished this downtrend. So you can see price was making lower highs, lower lows, lower highs, lower lows, lower highs, and lower low. So once price had closed above this last swing high here, which will be this last down close candle that came inside this key level, I know that price has shifted from bearish to bullish. So this will be my change in state of delivery. So now all I want to see is price pull back inside this range to a discount. So now you can see how price can be fractal. We see on a higher time frame we can see on a higher time frame that we're also inside a discount of this range from the high to low. So this is how you can use the higher time frame with the lower time frame to get real good entries and a high risk reward. So if I know that we had if I know we had the discount of this range, and also on a lower time frame, we just shifted on the 5 minute or on the 15 minute, and then price shifted bullish on the 15 minute as well. I want to look for an entry here. How can I find an entry here? Cool. I need price to go into a discount. I need price to go into a key level. What is our key level? So as you can see, we have an inversion fair value gap here, and price is reacting to this inversion fair value gap. So all I need now is I need to see the 1 minute chart. So if we go down to the 1 minute, we just want to see the same thing. I just want to see price shift. So as you can see, we had a small little move down here where price had came down and we closed above. That's a valid area, but we also have this swing high here. The same thing that happened on the 15 minute, the same thing happened on the 1 minute. We got price having this downtrend, came down, took out some liquidity, and then we shifted bullish. So all I would look for is for price to show me that it wants to go higher from here, right here. So you can see it came down inside an inversion fair value gap. But not only this inversion fair value gap, let me get rid of this one, this big fair value gap here. Not only this inversion fair value gap, but we also have a fair value gap as well. So that'll be an inversion fair value gap, and this would be your fair value gap. So you'll notice a lot of times when you're trying to enter price on a key level, a lot of key levels, or PD arrays is what we call them, which would be your premium and discount arrays, they'll overlap. So you'll have a fair value gap overlapping with an inversion fair value gap, overlapping with an order block, overlapping with a breaker. It's all these terms for them. However, I just like to keep it basic. If I get a change in standard delivery, I know that creates an order block. But I'm typically looking to enter off of fair value gaps. So we can see here, price came inside this internal range liquidity, which would be your fair value gap. And then we got a shift of price here once price came inside this fair value gap. So I can say that it's safe to enter in the market here. Now that price is showing me that we created this protected low. So now all I want to look for is a 1 or 2. Or if you think price can go higher because you still have this 50% level up here, you just want to be careful when you're trying to get price to, you're trying to get a higher risk reward, because price tends to pull back. So what we'll do here is we'll look for price to get to a 1 or 2, but we'll also see if price is able to get to that 50% level today. So let's see what happened. So as you can see, your target would have been hit. Price created a new range from this swing low to this swing high. As we can see here, reacted to a discount at this 50% level. As you can see, when price comes down into this new fair value gap at a discount level, you can also see how the bodies of the candle is staying above this 50% level. So all it did was dip below the 50% level to get to a discount inside this fair value gap, and then the bodies just came and closed right above this level. So you can see the wicks playing inside this fair value gap, and then the bodies close inside the level. And now we want to see price go higher. So this is what I mean by you want to be careful when you're trying to get higher targets, because price tends to pull back. So it's not even to say that this won't get here. It's just to say that when you're looking for 1 to 4s, 1 to 3s, 1 to 5s, price tend to pull back into the range a lot, create more liquidity, take out liquidity, come into the same levels it did before, like this fair value gap, and then it breaks higher. Or you could be wrong overall and price just wants to continue to the downside. So you always want to be mindful of that. Most of the times I'm just looking for 1 or 2 unless it makes the most sense. As you can see, we were in a downtrend for the most part. So price can just continue down. However, we don't really know. So we want to just stick to our 1 or 2s until price actually shifts to the upside. So let's see what happens if we keep playing this out. And if you would have tried to hold it any longer, you would have been stopped out because your stop loss is here. So you want to make sure you're being careful of that. You see what I'm saying? So in this last example on silver, we can see that we have a high here after price created this low. So we want to draw our premium discount from the high to low. Price had took out this liquidity down here. And notice how price is trading above the midpoint inside of premium. So now we want to see price retrace below this 50% level or to this 50% level at a key level, which will be your fair value gap, your inversion fair value gaps, etc. So here we have an overlapping of an inversion fair value gap again, and we also have a fair value gap as well. So all that really means is that this is a very powerful level, because we have two key levels that we want to see price trade from working in our favor. So do we automatically want to buy once price gets to this discount? No. The reason why is what it's telling me is so basically what price is telling me right now is that if I'm already bullish, price is now trading in a more favorable area of the range, right? So if this showed me that we're reversing to the upside because we got this inversion fair value gap, or this fair value gap that we closed above that created an inversion fair value gap, it's showing me that we potentially have a bullish trend now, right? So I don't want to just enter in the market just because we're at a 50% or we're at a discount level. It just shows me that it's more favorable for me to trade buys in this level because we did come to a discount after taking liquidity and breaking to the upside. So it's trading at a discount rather than at a premium. That makes me think, okay, cool, I can start looking for a trade, right? So now I'm looking for additional confirmations to support my bullish idea. So let's just be patient and see what price does. As we can see, price is trading up inside a premium. It creates a new high. So that would have been a situation where if you caught a buy here and you just got a little 1 or 2 back to these highs, you would have been correct, right? But let's say you wanted to wait even longer and you had your stop loss here, you would have got stopped out. This is why you don't just trade. You want to wait for confirmations to see if price actually wants to go where you have an idea price wants to go. So let's quickly recap. Your premium is going to be the expensive area above a 50% level inside your range, and a discount level is going to be the lower area inside your range below the midpoint. Premium and discount help us identify value, but they are not trade signals by themselves. You always got to have higher time frame context, liquidity, confirmations before entering in the market. Point blank, period. So now that we understand premium and discount, the next question becomes, how does price actually move from one side of the range to another side of the range? Why does it consolidate, sweep liquidity, and then expand? That's exactly what we're going to go over in the next video when we break down AMD and PO3. If you got value from this video, make sure you like, subscribe, comment below what you want to see, comment below any questions you guys have. I'll catch y'all in the next one. Make sure if you want to join my Discord, just comment below Discord. I'll send you the link. That's all I got for y'all. It's your boy AP Reese. I'm out.